Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the gold market. So on the daily chart you could see that it seems nothing has happened recently. The market just keep going lower, breaking down this kind of the indecision candle is taken out of these lows, and in general market is able to keep the bearish context that we discussed. But if you'll take a look at the intraday charts, you can see that significant volatility was standing in the moment of the PMI releases and in the statement of the Jerome Powell. Which could bring the bad surprises if we actually ignored some tricky moments that we discussed recently, why we said it's better to take the pause with the possible taking the short position, because we expect this might be really big volatility and market could show significant upward action before we get the next direction, and it's not the fact yet that gold will be able to hold this bearish context. But fortunately, you can see that on the daily chart, bearish context is still valid. Markets keep going lower. We already said that potentially it might be big butterfly here, so it might be left wing. As you can see, that might be the starting point of the right wing. So downside action could not stop just on the taking out of these lows, but would keep going lower. Besides, if those of you who have heard recently the statement of the Jerome Powell, he has confirmed everything that we have said. Inflation is not temporal. We do not know what to do with inflation. We can't control the inflation, and inflation has started even before the confrontation in the Ukraine. So it just confirms that the United States is entering a significant crisis, which is actually structural character. It's not some recession as somebody tells, because recession is the cyclical issue, but here is not the cyclical situation. And that's just triggers the expectations that another 75 basis points rate could change, and until investors are just not understand that it's necessary to run into safe havens, they still treat as safe havens the treasuries, which is a big mistake in the current situation. The gold market will remain under pressure because rising rates, increasing demand for liquidity, as everybody needs to serve their debts in the United States mostly, and the 70% consist of the floating rate debt, and its rate with changing, it demands more money to pay coupons, make repayments, and so on. And gold market will become another source of the liquidity where it will be trying out, which is make the pressure on it. But this will be until the moment when everybody will recognize that treasuries is not the safe haven anymore, and that's market, that the United States might be at the edge of the big collapse. And in this moment, we should see rising demand for the gold market, but well, that should happen a bit later in the year. Meantime, as I said, here's might be butterfly. Also, we could consider minor ABCD pattern as well here with lower standing target. But since today is Friday, I suppose that we need to focus on a bit nearer standing targets. These patterns were discussed in the weekly report. On the 4-hour time frame chart, you could see what really has happened. When we saw this grabber and this rally, we said wait a bit more and do not take the short position until the clarity. And indeed, take a look what has happened. This market collapsed and showed this really fast action back to the top, and then it has been erased. So with this suggestion, we just escape this very unpleasant performance that might be really not very good for our account. But now, when the market is dropping lower and erasing this action, you could see that bearish context is confirmed, and you could easily think about planning to take the short position and keep going with this performance of the gold. Speaking on the targets, on the hourly chart, you could see in the nearest standing targets, we see that this might be the OP around 1810 area, 1812 maybe, which is also might be completed with the butterfly. Butterfly has two extensions, first one 1817, next one 1809, which is very close to the OP, and in fact we could say that this butterfly might complete this nearest standing ABCD pattern. Once this target will be completed, we will see what could happen next, whether we will consider the XOP or take a look at this larger, as I said, this large A, B, C, D pattern, right? And turn to the weekly butterfly potentially, if downside action will be strong enough. Here on the 4-hour time frame chart, another moment to watch for is the erasing of the C point. So if market will drop below the C, it will erase the ABCD pattern, and that will be final confirmation that no other upward action should happen, just because market just erased the existed ABCD pattern after completion of the OP. So you can see that even very fast action to the OP not necessarily suggests further the upside continuation to the XOP. It not always happens, but still we have to acknowledge that this happens in most cases, let's call it this way. So that's actually what we have on the gold. Bearish context still stands valid. There's nearest targets that we're watching for, and probably you could consider some retracements, making decision on the position taken.